Hello, and welcome to this video analysis report of the Ruth Hospitality Group. This video presentation is part of the Burken Road Reports program at Tulane University's A.B. Freeman School of Business. Ruth Hospitality Group currently trades on the NASDAQ under the ticker symbol of RUTH. The analysts who researched and compiled this report are Dongmu Sun, Michael Hammer, Agnes Lee, and Evan Kohler. Our team developed a 12-month target price of $17 and an investment rating of market perform. I will start off this presentation by offering an overview of Ruth's Hospitality Group, followed by an analysis of the premium steak industry. Next, I will detail the methods and reasoning behind our valuation of the company. Then, I will discuss the operational, regulatory, financial risks that the company currently faces. Finally, I will describe the investment thesis that we have developed for Ruth's Hospitality Group. Ruth's Hospitality Group was founded in 1927 in New Orleans, Louisiana. The company is headquartered in Winter Park, Florida. Today, there are more than 140 Ruth's Chris steakhouses, including 20 international restaurants in Mexico, Hong Kong, Shanghai, Tokyo, Canada, and Dubai. Among all of the locations, 65 restaurants in the U.S. are company-owned. The company-owned restaurants generated $325 million worth of revenue in 2014. The other 77 restaurants in the U.S. and all of the 20 international restaurants are franchisee-owned. The franchised restaurants generated revenue of $15.8 million in 2014. Several recent developments have affected the company's operations. In January of 2015, Ruth's Hospitality Group completed a $10 million sale of its Mitchell's Fish Market and Mitchell's Steakhouse brands with Landry's Inc. In addition, the board of directors also announced a new share repurchase program. The share repurchase program authorizes the company to repurchase up to $50 million worth of common shares outstanding. This chart shows the performance of Ruth's Hospitality Group's stock over the past 5 years. Following a recession period low of 95 cents, the stock price has since grown 15-fold to $15.09. The premium steak industry serves as a proxy for the fine dining segment of the restaurant industry. Restaurants in this segment typically offer upscale dinner and alcohol menus with an emphasis on service and high-quality food. The target market is comprised mainly of two segments: corporate diners and households with an annual income of over $75,000. The business is highly seasonal, attracting most customers during the first and fourth financial quarters due to the cold winter months and a holiday season. As a $5.7 billion industry, this segment is very competitive. Aside from Ruth's Chris, major players in the industry include the Capitol Grill, Morton's Steakhouse, and the Palm Restaurant. Steakhouse restaurants vary from large public chains and also smaller private restaurant companies. A major driver of the industry is consumer confidence and consumer spending. Ruth's Chris was affected severely by the financial crisis, but has turned around since. A high correlation exists between the company's revenues and consumer confidence, as measured by the University of Michigan's Consumer Sentiment Index. Another important economic trend is rising beef costs, as the restaurant's essential input, prime and choice-grade steaks, represent a very small percentage of total available beef and thus have volatile prices. Lastly, government regulations play a major role in shaping Ruth's Chris operations. Many employees are paid based off of minimum wage levels in each state, so suspected increases in both nationally and on the state level can negatively impact the company's margins. Food labeling requirements may also affect company operations, as the company will soon have to list calorie information on their menus, which is another example of a regulation that may affect business operations. Ruth's Hospitality Group's publicly traded competitors include Darden, Bravo Brio, Del Frisco's, and Texas Roadhouse. Its private competitors include Morton's Steakhouse, The Palm, and The Melting Pot. Ruth's Hospitality Group's return on asset and return on equity ratios are the highest among its peer group. Additionally, the stock is the least expensive among its peer group based on a price-to-earnings ratio. The company's current ratio and price-to-sales ratio fall in line with industry averages. We use the relative multiple method to determine the value of Ruth's Hospitality Group based on average ratios of its peers. We used a relative price-to-earnings ratio of 25 and arrived at a target share price of $17. We also used a relative price-to-book value ratio of 5.5 and arrived at a target price of $16.98. Lastly, We used a relative enterprise value over EBITDA ratio of 12 and arrived at a target share price of $16.52. Finally, we arrived at a 12-month target share price of $17. The company faces various operational, regulatory, and financial risks. In terms of operational risks, the company faces environmental risks related to fluctuations in beef and seafood costs. The company is also subject to consumer risk and franchise risk. In terms of regulatory risks, Ruth's Chris Steakhouses are subject to Food and Drug Administration regulation and wage legislation. Finally, the financial risks include credit risk, interest rate risk, and foreign currency risk. We believe the company is doing a great job at evolving with restaurant trends in the increasingly competitive segment of the restaurant industry. New restaurant openings, along with favorable market conditions, will continue consistent revenue growth. Over the past 6 months, the University of Michigan's Consumer Sentiment Index has seen an average growth of 2.4%. We expect this growth to continue and for the company's revenues to follow suit. Next, the sale of Mitchell's brands allowed the company to focus on its flagship brand, a downsizing trend that many large chain restaurants are following. We believe that the Mitchell's brands were limiting to the company's growth, but now Ruth's Chris can direct all resources towards the Ruth's Chris Steakhouse brand. Lastly, the franchise program has always been a strong source of growth for the brand. It allows the company to expand to new markets without the investment risk of opening more company-owned restaurants. With many franchisees having close ties to Ruth's Chris management, we expect existing franchise partners to continue seeking growth opportunities.